when ancient gold met a digital ghost. In 2009, the world was shaken. The global financial system had just cracked under its own weight. Banks collapsed. Governments printed money to save institutions that had gambled and lost. Trust, the invisible glue of finance, was breaking apart. Ordinary people were watching their savings evaporate, and once again, humanity turned to something familiar, heavy, and ancient. Gold. Gold had been money before money had names. It survived empires, wars, plagues, and collapses. It did not rely on electricity, passwords, or belief. It simply was. In 2009, gold traded at roughly $970 per troy ounce, meaning 1 kilogram of gold was worth about $31,000. Owning that kilogram meant security. It meant you held something that central banks respected and history endorsed. Gold had no ambition to change the world. It only promised not to fail. At the same exact moment, something strange appeared on the internet. Not in a bank, not in a vault, not in the hands of any government. Bitcoin arrived quietly on January 3, 2009, hidden inside a white paper and a block of computer code. Its creator, calling himself Satoshi Nakamoto, embedded a message into Bitcoin's first block, a newspaper headline referencing bank bailouts. It was a signal, almost a warning. This system exists because the old one broke. But hardly anyone noticed. Bitcoin had no price, no market, no chart, no respect. It wasn't traded in shops or discussed on television. Early users mined it on laptops, earning 50 BTC per block, stacking coins that felt more like arcade points than money. These early miners weren't chasing profit. They were experimenting, curious, or simply ideological. Eventually, later in 2009, Bitcoin received a symbolic valuation, about $0.00099 per coin, less than a fraction of a cent less than the cost of breathing. At that price, Bitcoin was effectively free and treated accordingly. This is where the fork in history quietly formed. Imagine standing in 2009 with 1 kilogram of gold in your hands. Solid, cold, reliable, worth about $31,000. You could store it, insure it, and sleep peacefully knowing it would still be valuable tomorrow. Or, unthinkably, you could sell it. If you took that gold, converted it into dollars, and used it to buy Bitcoin at $0.00099, you could have purchased over 31 million Bitcoin. 31 million. At the time, that number would have sounded meaningless. Absurd. Why would anyone want millions of something nobody accepted, nobody trusted, and nobody understood? Bitcoin could fail tomorrow. The code could break. Governments could ban it. The network could simply disappear. Gold, meanwhile, had survived 5,000 years. The decision wasn't between profit and loss. It was between certainty and imagination. Almost everyone chose certainty. Those who held gold felt smart, responsible, mature. Those who explored Bitcoin were seen as reckless, naive, or strange. And yet, hidden beneath the noise, something profound was taking shape. A new form of scarcity, digital but absolute, governed not by kings or central banks, but by math and consensus. In 2009, gold stood proudly as the past. Bitcoin, barely visible, was the future, still fragile, still ignorable, still cheap enough to be dismissed. History had not yet decided which one would matter more. It was simply waiting. The wild years. Faith is forged in fire. 2010 to 2016. Bitcoin did not grow gently. It did not earn trust slowly. It exploded, collapsed, embarrassed itself, and came back again, over and over. These were the years that separated curiosity from conviction and speculation from belief. In 2010, Bitcoin finally touched the real world. A programmer paid 10,000 BTC for 2 pizzas. At the time, it felt like a fair deal, about $25 worth of food. Nobody laughed. Nobody gasped. The transaction was celebrated simply because it proved Bitcoin could be used. That single moment gave Bitcoin something priceless, reality. Soon after, exchanges appeared. Bitcoin climbed from fractions of a cent to 10 cents, then to $1. Early miners looked at their balances in disbelief. Coins they earned casually were suddenly worth something. Some sold immediately. Others hesitated. In 2011, Bitcoin did something that shocked everyone. It ran from 30 cents to $32 in a matter of months. Forums erupted. Headlines appeared. Critics sharpened their knives. Then, Just as quickly, Bitcoin collapsed back toward $2. Over 90% wiped out. The first real lesson was delivered. Bitcoin does not reward the impatient. Many left forever.